I think we can start now.
Okay, Bismillahirrahmanirrahim. Hi everyone and good afternoon from Dubai. This is Saeed Asif Rahman. I am the founder of Alif Technologies. Welcome to our webinar series on cryptocurrencies. Today is a very important topic about this cryptocurrency, what is a scam or the financial revolution. And Alif Technologies always brings the latest trend and topics which are in place in going on. And I would like to start the proceeding to you. Today's moderator is Dr. Farokh, and we have two speakers, very renowned speakers, and we'll be telling about them. To you, Dr. Farokh.
Thank you so much, Brother Asif. Assalamu alaikum wa rahmatullahi wa barakatuh, and hello everyone. I am Dr. Farokh Habib, and I would like to welcome you all in our webinar series, Alif Technologies webinar series. And previously we have done a lot of webinars which were very successful, and this is one of them in the series. Just to give you a very brief introduction of Alif Technologies and about this today's webinar. Alif Technologies is actually a Dubai-based company which is looking at Islamic finance and fintech. And we are actually trying to pioneer the digital transformation, fintech, and halal digital economy in the light of Islamic legal, ethical, and social principles. And our mission is actually to guide and advise our clients for Islamic finance and fintech products, services, and solutions, and share knowledge and educate the world about the traditional Islamic financial services and the latest innovations in the sector, and create and develop highly customized and tech-driven Sharia Islamic law compliant solutions for our clients to meet their requirements in the most efficient and cost-effective manner. So actually, in a nutshell, we are focusing on Islamic finance and fintech from three different verticals. Number one is advisory and consultancy. Number two is educational programs, courses, corporate trainings, workshops, webinars like this. And also the third one is product development and platform development as well. So we are looking in these focused areas from three different dimensions. And please do follow us on, as you know that I am one of the co-founder of Alif Technologies, and Mr. Asif is CEO and co-founder of Alif Technologies. We both are very enthusiastic about fintech and Islamic finance. And please, if you have any query, and if you would like to have any information, you can basically go to our website or follow us on Facebook, YouTube, Twitter, LinkedIn, and Instagram. And now, regarding today's webinar, let me just share some thoughts with you. The current crypto phenomena has been showing a positive trend for this year. As we already know that Bitcoin has bounced back from 3,000 to right now it's around 11,000 plus. So while attracting many segments of the society, because now people have already started talking about it again, although like previous year, in the previous couple of years, they were thinking that now crypto phenomena is going to be vanished from the face of the earth, but this didn't happen. So many developments have, and meanwhile, many developments have been taken place in the crypto industry. And this year, unfortunately, we have seen COVID-19, lockdowns, and economic crisis, which have only increased people's interest in this space. However, many are still confused about whether it is just a hype or reality, and where it is going to from here. So they have many common questions, like people have asked me about like are crypto assets a scam, or how have the COVID-19 and the current economic crisis affected the crypto markets, and what are the factors behind the recent surge in the market, and where the crypto phenomena is heading to. So these are the questions people have, and this webinar is going to address these crucial questions by engaging our distinguished panel, a panel of speakers. And we will engage these world-class experts in an interesting discussion today. We are going to cover like explanation of crypto assets, what is ICO, IEO, and STOs, and crypto exchanges about, and difference between a decentralized and centralized exchange, and is crypto phenomena a scam, or I mean like how to identify a scam perhaps. The current surge in the crypto market, latest trends, and future potential of cryptos. Uh, with me, we have Jasmine Ang and Mr. Arun Ting. Both of them, I really would like to thank them for accepting our request and having time for us to share their knowledge and experience and insights about the crypto market. So moving on to our first speaker, let me just give you a brief introduction of our first speaker, Miss Jasmine Ang. Jasmine Ang joined iPay88, an entity data company, as the Chief Revenue Officer. iPay88 is the leading payment gateway provider in Southeast Asia, providing innovative solutions to accept online and offline payments. Previously, she was the CEO of Razor FinTech, a leading offline to online digital payment network in the Southeast Asia. And also, before that, she was the CEO of NAM Malaysia, a leading blockchain technology company. She is also serving as a committee member to the Malaysian Crime Prevention Foundation, MCPF, in KL chapter. And she is also the co-founder and advisor to Epic Homes, which is an NGO for houses for affordable housing schemes. And she has over 20 years of experience in the financial services sectors. And she is a business consultant, advisor, and mentor, and doing a lot of mashallah. So without further ado, I would like to basically invite our first guest speaker, Jasmine Ang. And I myself was very eager to listen to her presentation and her insights, inshallah. So over to you, Jasmine.
Good evening. I'm dialing in from Malaysia. So thankful that to be invited to speak and to share some thoughts. And without further ado, let me just share my screen and the slides and be prepared to walk you through the ecosystem. And any questions after that, I'm more than happy to share, to answer. Okay. Can everybody see my slides?
Okay. Yes, I can see your screen.
Oh, great. Okay, so we're going to talk about the ecosystems for crypto assets this evening. I'll walk through a little bit about the history as well as some of the things that we can use crypto assets for. And I will conclude the slide with regards to how you would consider looking at a crypto asset for investment and how you would think through whether and evaluate for yourself whether this is an investment or a scam. So let's start. Now, a quick history on the ICO performance. And for those who are not too sure, ICO means initial coin offering. And that's where was the very first boom for blockchain, because everybody went a little over the moon over this new class of crypto assets, new class of investment assets. So if you look from 2013 to 2015, these are the new number of ICOs every year. So 2013, there were 2 new ICOs. 2014 was 8. And then you see a sudden spike up in 2016 to 552. And then it was hovering there at about 500 plus. And this is in US alone. We're not talking about all over the world, right? By June 2017, token sales had overtaken angel and seed venture capital funding for the first time in 2017, netting more than 550 million US dollar for coin issuers compared to 300 million raised from VC investors that month. So that was the phenomenal growth of the initial coin offering in its heydays. Now, in Q2 2018, what happened? It was what we call the crypto winter. And that was when I first joined NEM. I mean, I've always known about blockchain, and I joined NEM right at that time where things took a bit of a snow dive, as you would say. Bitcoin price went from 20,000, almost 20,000 US dollars in December 2017, and it crashed in April 2018 to 6,000 plus. It was devastating Bitcoin wipeout, as a lot of people who was in the industry at that time know. And NEM that time also had to re-strategize what it was going to do with its crypto assets. It was a very interesting time to be in blockchain, and I learned a lot from there. And that's why I'm still very passionate about the technology, very passionate about the promise that the crypto asset technology can bring to global advancement. So in 2020, we are seeing a resurgence. So the COVID has not done anything to dampen continued interest into this new technology. In fact, it seems to be holding steady, with the exception of the USDT and USDC, which are crypto assets pegged to the US currency. So naturally, its performance follows the currency. But if you look at the other crypto assets, it is holding very well. Bitcoin has increased in pricing to about 11,000. Ethereum is at 379. It's coming back to a bit more semblance of what we would like to see it grow into. So COVID hasn't been bad for crypto assets, actually. Now, I like to go in a little bit into crypto assets versus digital currencies. You know, crypto assets is all about the new technology and how the encryption of crypto assets allows for privacy or pseudonymity or total anonymity, depending on the kind of coin, how it's been created. So some coins are totally private. It is also decentralized, preventing the control of a centralized third party, and therefore it is censorship resistant. Crypto assets are at this juncture unregulated or not yet regulated in many countries. But I'll share a little bit about what's happening in Malaysia in the later slides. And it code guarantees functionalities, characteristics on a public ledger for those that are open blockchain, those that are on a public permissionless blockchain. Digital currencies are considered regulated because it is normally issued by a central bank or a central party. And the most famous example I can give you now is the digital yuan. The Chinese government is issuing a digital currency, and they are already using it within their own ecosystem. The other very famous digital currency that another entity was trying to issue was Libra. Facebook was trying to issue its own digital currency, but it got shut down before it could really take off because central governments were so concerned about it. Now, there are 5 big categories of crypto assets that we can use. Of course, there are crypto assets that can encompass more than one category, but generally we can break it down to these 5. Smart contracts, which are platform tokens powering the technology of smart contracts. The examples of these are Ethereum, Neo, EOS, which is a form of Ethereum. The other one is utility tokens. Now, these tokens have specific purpose. So there are certain business cases that issue out cosmetic tokens where you can use these tokens to redeem cosmetic goods from a particular cosmetic manufacturer or things like that. Transactional tokens such as Ripple, they are purely for transactions, so you can exchange Ripple tokens. Then you have decentralized payment tokens like Monero or Dash that also adds value by removing privacy and keeping you totally private. And of course, you have tokenized assets, which is like if you had a piece of masterpiece, a Rembrandt or a Picasso, you want to sell it out in small pieces, you can actually tokenize that one big piece of painting into, say, 10 tokens, and 10 people can invest into your painting and have it all on the blockchain ledger. And that will enable authenticity of ownership of that big piece of painting. People are utilizing that for real estates now and many different asset classes. So generally 5 big categories of crypto assets. Now we go into ICO. Entrepreneurs that are looking to launch a new cryptocurrency can do it through what we call an initial coin offering. This is a variation of what we understand to be IPO. You go into IPO because you want to raise money for a particular enterprise. But in an IPO, there is a lot of stringent government regulation, whereas in the ICO environment, there is little to almost no government intervention or regulation governing this rule. So anyone can launch one. And one of the prerequisites is you have a white paper. And what is the white paper? The white paper is basically a piece of document outlining the idea that you want to sell, how the blockchain system technology is going to make that idea a reality. Of course, have a website or an app describing how it works. And then from that, you can seek funding through what we call initial coin offering. In this model, advertising and marketing is the biggest key to success because there are so many different coins in there. If you're not looking to launch, but rather invest in a new coin, this is where most scams happen in the ICO environment. So I'm going to go through the different classes of offerings, and then we'll talk about how to spot the scam from the real deal. So there is another type of offering, which is something similar to ICO. We call it STO. An investor is issued with a crypto coin or a token representing their investment. So there is an underlying asset of sorts. But unlike an ICO, a security token represents an investment contract into an underlying investment asset, such as a stock, a bond, fund, or real estate. A security is defined as fungible, not a negotiable financial instrument that holds some type of value. It can be an investment product that is backed by a real world asset, such as a company or a property or a mining farm and things like that. The security token is therefore represents the ownership information of an investment product. STOs also can be seen as a hybrid approach between cryptocurrency ICO and the more traditional initial public offering, because there is some form of requirement like a REIT investment on the blockchain technology, but it is still not as regulated as an ICO. So the only part that is subjected to regulation is your underlying contract, your underlying asset, and you're issuing a securitized token offering on that particular piece of paper that is a contract or an asset that represents an asset. So that's the STO. Now, what is the difference between an ICO versus an STO? STOs are asset-based and they comply with regulatory governance of the country where the asset sits in. Most ICOs, on the other hand, are utility coins, utility tokens, and they are based on decentralized applications. The purpose of those coins is for usage and not for investment. So the people who issue out ICO will tell you. As a result of that, ICO platforms circumvent certain legal frameworks that do not register or comply with governance of all regulatory bodies. Now, the barrier to entry for companies to launch an ICO is very low, depending on which country you're launching it. In some countries, there isn't even a barrier. You just register a company and that's it. The only reason you register a company is so that you can open a bank account and receive funds. They don't have any upfront compliance work. They don't vet the investors or who they sell their coins to. So there are a lot of controversies surrounding ICOs. Whereas STO, because it has the intention of offering an investment contract that is an underlying thing on top of what is being offered as a coin, that the security token coin offering, you must have an underlying securitized asset, a contract, or something that is of tangible value that is subject to regulation in the country that these assets sit in or the contract is being enforced in. And therefore, there is some form of governance control over what is the underlying offering of the STO. So that is the main difference between an ICO and an STO. Then we have another one. It's called IEO. Now, of the three, this is supposed to be the one that is most regulated, but even then, in comparison, it is not as regulated as traditional world offering. Now, an initial exchange offering, as its name suggests, is on the platform of a cryptocurrency exchange. And contrary to ICOs, an IEO is administered by the crypto exchange on behalf of a startup that wants to raise money. So the IEO now is what we call the centralized body that monitors all these things. As the token sale is conducted on the exchange platform, token issuers have to pay a listing fee with a percentage of the tokens sold during the initial exchange offering. In return of the tokens of crypto startups are sold on the exchange, their coins are listed after the IEO is over. So once the offering is done, they already have an immediate listing to back it up. As the cryptocurrency exchange takes a percentage of the token sold, the exchange is incentivized to help the token issuers market its operations. IEO participants don't send contributions to a smart contract, such as governed by an ICO. Instead, they have to create an account on the exchange platform. The contributors then fund their exchange wallets with coins and use those funds to buy the fundraising company's tokens. So it's a little bit more roundabout way. And I'll share a little bit with you later why the initial exchange offering is slightly more secure compared to the ICO. Hang on. Now, this is a comparison. I found this off a site, so I thought it was good to share so that you can do a quick comparison. Fundraising for an ICO happens at the token issuer's website, whereas on the IEO, it happens in the platform of the exchange. So on crowd sale counterparty, it is the project's developers, those who are holding the coin itself are the ones responsible. Whereas in the IEO's case, is the cryptocurrency exchange that is the crowd sale counterparty. So they are the ones, right? Now, smart contract is managed by the startup themselves, whereas in an IEO environment, it's all on the cryptocurrency exchange, on the exchange itself. AML KYC, in the ICO environment, there is a requirement, but it can vary from different projects and depending on where the projects are. And like I said, in some countries, there is very minimal, almost to nothing. And on the IEO, it's not necessary. The exchange will be the one conducting the AML KYC on its issuers. And if you look at the trend of exchanges today globally, there is more and more governance coming around the exchange ecosystem. Now, marketing budget needed in the ICO environment, fairly high, because as the ICO issuer, you will have to bear everything yourself. You have to market and all those things. Whereas in the exchange offering, it is relatively low because the exchange themselves are the one who's going to be actively marketing the token for you. Now, in terms of screening required before a startup can launch, there is no screening in the ICO environment because you're creating the website. Investors are coming directly to you to take up your coins. Whereas in an exchange environment, yes, the exchange will screen the company before it allows it to raise funds on the platform, simply because as an exchange platform, you too would want to safeguard your own reputation as a good exchange platform that people can come in and invest on. Automatic token after crowd sale, listing after crowd sale. So a lot of things that happened during the ICO boom was after people bought into the ICO, they couldn't list, they couldn't trade it on a second-hand listing that is of repute. So there was liquidity issues and so on and so forth. So a lot of ICO projects became scammy because they couldn't get onto an exchange where people can then sell off whatever they invested in the coin. The project may not have been scammy to start with, but because they couldn't get liquidity moving into an exchange listing, they got stuck. So it wasn't an intended scam, but it got stuck. Whereas if you were to list on an exchange platform directly, and they are responsible for marketing for you, the minute your IEO offering closes, that means a subscription has all come in, immediately that coin gets into the exchange for listing. So that helps a lot, right? Now, just to share some, what do you call this, statistics, fundraised through IEO in terms of the dollars per month. Again, this is quite US centric. As of March, it is quite significant. And in April, we haven't, the report that I was looking at didn't have the data in fully for April yet. So you can see it is growing. It's a market that's growing. And there is a lot of opportunities there because people are increasingly concerned about the traditional economy where people actually have to be physically present to do a transaction. Whereas the blockchain-based economy is slightly different. Everything is on a distributed ledger that is immutable, and therefore fraud is minimized to a large extent unless something else happens, right? But a transaction will always be recorded permanently on a blockchain. And that is what it is, and it avoids double spending. All the good things about a blockchain-based asset is all there. So that's, now exchange tokens, crucial to IEOs amongst the biggest winners. So you can see BNB, Binance, Huobi, and OK Exchange and all that, they are doing very well, issuing out IEOs. So these are some of the things that are happening in the crypto exchange, crypto asset ecosystem. There is an initial exchange offering now. Now, just to run through a little bit about what's happening in Malaysia, because I'm here, so I can share with you the fact that our Securities Commission here actually regulates the exchange platforms. And as a result of that, there is a long list of requirements and subjected regulatory, what do I call this, criteria that people must fulfill before they can become a licensed crypto exchange operator. There are 3 licensed crypto exchange operators in Malaysia, 2 of which are fully launched. Synergy, if I'm not mistaken, and Luno. These are the 2 exchange platforms that are listed in Malaysia, regulated with the Securities Commission, and they fulfill all these criteria that I have listed out here from our Securities Commission website. So Malaysia as a country has gone on to embrace to a large extent the enablement of the blockchain industry and economy. This is one of the very first steps that the Malaysian government and regulators have taken into this direction. It provides investor a certain amount of comfort and assurance that the Malaysian government does look at these types of offerings and want to make sure that investors are protected. You see, because Securities Commission of Malaysia's main function within the Malaysian economic and investment environment is to protect investor. Their mandate is investor protection. So for them to have come up with all this is actually very good for the blockchain industry within the country. At least you know what are your area and your framework of operation, within the country and how to go about that. And when you are engaged with a licensed exchange operator in Malaysia, you know they are regulated, they cannot run away with your money. So that's what it is in Malaysia. Now, crypto exchanges are generally trading platforms. There are three different types of trading platforms. There are the trading platforms, they are websites that connect buyers and sellers, and they take a fee from each transaction. And then there are the direct traders where it's peer-to-peer trading. You have somebody who's selling and somebody who's buying, and then you connect and you can do the necessary. And then, of course, you have the brokers. Now, the Securities Commission governs the trading platforms. If you want to do peer-to-peer, they are not in that purview, and brokers are not allowed to operate in a big way. So it's mainly trading platforms, and to some extent, if there are dealers that wants to trade on the trading platforms, those are all being governed here in Malaysia. Things to look for in an exchange: reputation. So if you know Binance, you know it is good. Go and look into industry websites. Are these a good exchange to operate on? How much do they charge for trading fees? Fees can differ substantially depending on which exchange you use. Payment methods: how can you pay for it? Can you do it via PayPal? What are the verification requirements that they need you to have before you are onboarded to the exchange? Geographical restrictions: some countries specifically do not allow offering outside, and some countries do not allow people to solicit money for crypto assets. One case in point is US. If you are to have a US investor into your blockchain assets, the crypto assets, these investors must be accredited investors. And the SEC in US has a list of what they mean by an accredited investor. So you cannot simply take any US citizen's money. The feds can come after you if it's not done properly. And then, of course, the exchange rates, those are all different. You need to go in and look at these things before you decide on a particular exchange to trade on for yourself. Now, what are decentralized exchanges? The centralized crypto exchanges are actually what is happening today, mostly. The decentralized crypto exchanges are actually not as popular. The one that I know of is this decentralized crypto exchange called Changerly. Centralized crypto exchanges would be like the ones I mentioned to you in Malaysia: Luno, Synergy, and Binance, and Hobby, and OKX, and all these kind of big exchanges. They are the centralized crypto exchange. So these are the two different ones, and these are the things that is their criteria. I mean, well, this is their identifying criteria. You will be able to get the slides from Dr. Farouk later. If that is what you want, they will be able to provide that to you. Okay, my final slide. How to evaluate a crypto asset, whether it is a scam or an opportunity. So I have a list of 12 questions that I always tell people to ask before you decide to part with your money. When you look at evaluating in investing in an ICO or an STO or any blockchain-based project, you should ask, what problem does this project solve? How will it solve all these problems? Is the blockchain necessary? Sometimes people just do a project and call it blockchain just to make it look good and attractive, because they know that there is a big community of investors looking to invest into a blockchain-based project. So when you look at a project and you say, actually, you don't need a blockchain for this, you could do it already and maybe even cheaper, then you should think harder. Why should you want to invest into this blockchain based project, right? Has someone done this before? If they have, how have they done it? Is the token useful? How are the tokens allocated and distributed? That will also give you an indication how committed and what kind of community is in this project from a token ownership and allocation perspective. How does the project plan to grow? What is its roadmap to sustainability, to profitability? Is that shared? What is in the white paper? How is the white paper written? How much development work needs to be done for this project? Is it a 1-year problem, 3-year problem, 5-year problem, 10-year problem? You need to think about all these things. How is the community for the crypto asset, meaning those who are interested in this project? You go into most of all these ICO projects have a Telegram chat group. Now, if you go in there, you will be able to see if this community is a very toxic community. Is it there just for the money? Is it there for a real problem solve? Is it there really to solve the problem that this project says it is supposed to solve? What is the community like? Who is the team that is running this project? Are they credible people? What is their history? They say this, but who is running the project? Who is the CEO? Who is the tech person? Who are the real investors? Right? And then you ask yourself, how much am I willing to invest? Because like we talk about investments, investments carry with it a certain amount of risk. There is always a risk of losing your investment. So that is the question you also need to ask yourself in relation to investing into a crypto asset. There, as I shared, 2020, the COVID situation does not seem to dampen the growth of IEO, STO, and even ICOs. But is it a scam or an opportunity? You need to evaluate every single project that you are looking to invest to carefully. And these 12 questions is not by all means exhaustive, but it is a start to get you thinking with regards to where you want to invest your money into. And with that, I am done. I think I've kept to my time of 15 minutes.
Thank you so much. It was very insightful and enlightening presentation and very well organized. In fact, like I was also looking at listening to it and looking at the presentation with so much excitement. Very nicely presented. I have so many questions actually, but I took the liberty to answer some of the basic questions. And then in order to save the time, and I have some of the questions which are relevant to the presentation. So I will ask them one by one. We have one question that is there a difference between ICO, IEO, STO on one side and on the other side crowdfunding platforms?
So crowdfunding platforms are very much P2P. They are also a form of investment if you think about it. The crowdfunding platforms that I'm exposed to is like your Kickstarter. You have a project, you have a prototype, it's a very exciting product, and you want the people who will be able to use this product to then fund you. You have a prototype already, they look at it, they like it, they give you money. Of course, even in a crowdfunding platform, the chances of it being a scam is also very high in comparison to an ICO platform, let's say. The only difference is in the crowdfunding platform, it's by currency, existing currency. You pay with your fiat money, whereas in the ICO, STO, and IEO platform, you're investing into an asset, and then you can hold the asset over time. In a crowdfunding platform, you will know fairly quickly whether this is a good investment or a bad investment. It's another form of investment. I hope that answers it.
Okay, perfect. We move to our second question. In your presentation, you mentioned that crypto transactions are not pretty much regulated in different jurisdictions. So if let's suppose that if there is a dispute among the stakeholders and the transacting parties, so how we can handle those issues and how can we solve them?
So depending on which parties are coming into dispute, generally there is a contract of sorts. And for the ICO, there is the what we call the sale of future token contract as well. Though many people have used that kind of contract to try and take action in court, many times that they find that those contracts, depending on how it's worded, is not necessarily enforceable. So the countries that don't regulate these transactions, you need to really vet through the contract that you get into. But like in some countries, and increasingly more countries are coming in to regulate blockchain-based transaction from a perspective of ICO, STO, IEOs, then you know in those countries you are more protected. Countries that don't have very clear regulation, you need to be a little bit more careful in reading through the contract that you have specifically with the offering issuer.
Okay, perfect. We would like to ask another question is, you mentioned in your presentation that there was a spike in ICOs in 2016. Everybody was trying to issue some ICO and collecting some money. So what were the factors actually behind it? Was it only like a mania, like people were trying to FOMOing in? I mean, like they had this fear of losing out or something?
Actually, it is exactly that. And also the fact that all the ICOs seem to be tripling, quadrupling, 100 times, growing in value when people manage to get it listed. So suddenly people looked at this asset class and thought, wow, I can make a lot of money out of this. And of course, one of the oldest blockchain Bitcoin is Bitcoin. The blockchain asset, crypto asset is Bitcoin. Bitcoin at that time was what we call mooning, skyrocketing to the moon. It wasn't even a hockey stick. I think it was just a vertical up. And so people saw this phenomenon and said, we got to get in on that. And not everybody can afford to buy a Bitcoin then. So what did people do? They had very innovative new ideas that they wanted to take advantage of the technology. So there were some projects that came up then that still are around, but there were also a lot that were scammy. And then there were also just as many that couldn't make it through for genuine purposes, the success of the project. That was it.
Okay, perfect. There is one interesting question that you mentioned about IEOs. And you also mentioned that crypto exchanges in some jurisdictions are regulated, these trading platforms. So is there any requirement that companies running IEO portals need to be listed on the stock exchange, or how the oversight and the regulatory framework is applied upon them?
Okay. In Malaysia, the governing body, the regulator that has come about the guideline is Securities Commission. They oversee our own exchange, the Malaysian Stock Exchange. So they looked upon the crypto exchange as another form of exchange, except that it's still starting. It's in its infancy. So they are being governed almost like an exchange, except that it is a lot more stricter. So in Malaysia, for you to even list a coin, it needs approval. Every single coin listing requires approval from Securities Commission. So they run it stricter than stock exchange platform, because the guidelines are not totally clear, because there's so many different types of asset class. But once you get listed, you're able to receive investors' money, and the investors are more assured and comforted in investing in you. So that's how it's being governed in Malaysia.
Okay, perfect. Just a quick question. In your view, what do you think, what causes the recent rebound in the crypto market? Is it only COVID-19 effect, like people are going through economic crisis, or is there anything else?
So I'm an optimist and I'm an evangelist for blockchain technology. I believe that this technology has real promise in revolutionizing how we do business, and also creating brand new economic pillars for us to develop in. So I liken the blockchain technology to be like in the industrial revolution age, where people from farming learned how to do machinery, and then we became industrial age. So I see blockchain as being that time in the history where we move from an industrial economy into a knowledge economy where everything is all about information, knowledge, and the virtual environment. Now, the COVID situation has exposed a lot of things, one of which is a lot of economy cannot exist as it does today in the physical environment where I have to go and see somebody to get business done. Increasingly, we are seeing the push for digital transformation being hastened by COVID. Now, the flight into the digital asset is because suddenly we realize that the physical asset is at risk, may not bring back the kind of returns that you expected it to. Now, having said that, the second part of the question says that, will there be a plunge? If you look at the internet.com boom time, where when Amazon and all that was first starting, Google and all that, they went through a huge spike. And then just like everything else, there were a lot of what we call the dot-com bust. So there was the big bubble burst of the dot-com era, right? But what has remained has really changed how we even shop today, right? How we look for information, search engine, and so on and so forth. So same, I see the blockchain as similar. There will be that crazy moon, which I think has happened in 2016, 2017. And if you look back to some of my charts earlier, you will see that even though it came down, it didn't crash all the way to what it was in the beginning. The value held steady at a certain floor, which is way higher than where it started. And it still has the potential and opportunity to climb up. Yeah, so I hope that answers.
Okay, I think that I will take one more question live.
Yes.
And then perhaps if you are comfortable, you can type in some of the answers to the questions in the section. But I will take one question.
Yeah, I have one. I have one question. Sorry to interrupt you. This people, they are asking from time to time. I answered by I need expert advice from you. That you see that when we are talking about that crypto asset is a scam or is a financial revolution, the thing which came into mind is scam is that fluctuation of price it has. If you compare with any other regulated or fiat currency, or you see that in forex and other things like that, you see that it's barely some fluctuations are there, and fluctuations are there, but there are so many reasons behind that fluctuation, that if some country goes on war, or there is too much chaos on a country, that its prices goes down, and these things happen. But when you look at that trading is still, as today we are talking about in cryptocurrency trading, you see the major part is being done by Bitcoin. And Bitcoin, as per today, is also is unregulated investments, not regulated by anybody. It's regulated by a system. Okay, now exchange, they have their own system to evaluate, KYC. So my question to you is that what are the reasons behind that, that which lead to the fluctuation of specifically the Bitcoin? That just 3 days before it was 10,000 something, today is 11,370. Like so. Because this fluctuation makes people, think about that maybe it's a scam, or one day everything or money will go out. So what do you think? What are the reasons behind that? Sorry, just to jumping in.
No problem. Okay, I'm not a trader by profession. I love the blockchain technology. in terms of what could possibly cause the fluctuation in the pricing is, to me, very much supply and demand. We talk about the phenomenon of Bitcoin whale, people who hold a lot of Bitcoin because they invested into a large amount of Bitcoin in the early days when Bitcoin was at 10 cents. You know, we have the legendary story of somebody paying 10 Bitcoin for a pizza. And today, the person who took the 10 Bitcoin for a pizza has sold the pizza for $100,000 valued today, right? So how does this fluctuation work? We know that there are whales. During certain times, they prefer to hold cash. They liquidate their Bitcoin holding. That does move market. And so you hear stories about people, suddenly somebody sold this and therefore the market has moved. But generally, the value and the price of Bitcoin has been holding steady. So if you are a long-term asset player holder, you would hold your Bitcoin asset for the long term. If you are going into punt, then you really need to watch the whales. The whales are the ones that will move the market intraday, intra-week movement situation. So that's the only insight I can share with you, because
thanks, Anonymous. Thank you very much. Yeah, very good analysis you have given and a very excellent presentation.
Thank you.
Very deep information we learned from you. To you, Farooq.
Thank you so much, and really appreciate your words, Mr. Asif, as well. So now we will move to our second speaker, who is a good friend of mine, Mr. Arun Ting. So Arun Ting is the Vice President of Access Blockchain Association, Malaysia. He has been a strong advocate of crypto, blockchain, and DLT for the past 7 years. And he is also the founder of Block Zero, which provides consultancy services to the oil and gas, as well as blockchain industry. In the blockchain industry, Block Zero provides a strategic advisory, marketing, education, and events organization services for projects. Block Zero is also the local partner of for Block On Group, a world-class events incubator, accelerator, and VC fund. He is also the vice president of Malaysian Investors Association, which is active in advocacy of investors' rights in traditional capital markets and the upcoming ICOs, STOs market as well. So I would like to invite Mr. Arun Ting to present. But before that, again, I would like to request Ms. Jasmine that if she's comfortable, she can write her answers in the Q&A section, because we have some pending questions as well. So to you, Mr. Arun.
Hi everyone, how are you doing? Thank you very much, Dr. Farooq and Sheikh Asif, and also Jasmine, for the wonderful presentation just now. So my presentation will take a deep dive into the crypto phenomena. So Jasmine provided a very good foundation of what we're going to talk about. So she basically gone through the history of cryptocurrency and the ICO craze, right, and the IEO. And my focus will be on the current phenomena, meaning what's happening within, let's say, 2020, right? So let me start my presentation. Can everyone see my screen?
We can see you, but I think that you are going to share your screen.
Oh, okay, sure. Let me try. Okay, share screen. Okay. All right.
Yeah, it's there.
Ah, okay, wonderful, wonderful.
Perfect.
So let me get started. Right, so I'll try to keep it very brief, and my approach will be on a higher level, looking down at the entire space. Okay, so this current phenomena with DeFi actually started only around beginning of this year. Now, majority of the DeFi projects, especially those who've gained traction, actually started earlier than that. Some of them started during the ICO craze. Some of them started during last year, 2019, but they did not manage to get any traction until only very recently. Okay. Now, there's another trend that you have to be aware of is something called interoperability. So right now, the blockchains that we have are basically like local area networks, right? So you have, for example, various corporate companies, all of the internal network. And at the moment, it is very difficult to find a way for the blockchain to communicate. So we have something called, prior to this, we have something called cross-chain protocol. So it's basically linking one blockchain, blockchain A to blockchain B. But there isn't really a, common protocol that everybody can use, like the internet, to communicate with each other. So within the interoperability sphere, we have projects such as Polkadot, which is gaining a lot of traction. And this particular project is started by Dr. Gavin Wood, who's also a co-founder of Ethereum and also the creator of Solidity smart contract. And we also have other contenders like Cosmos, Matic, and even within the Hyperledger sphere, we have a Hyperledger Cactus, which is driven by Accenture and Fujitsu. Now, on another lesser trend, which is important to be aware of, is CBDC. So CBDC stands for Central Bank Digital Currency. And central bank digital currency is something that has been adopted in a few countries, namely Cambodia. I believe NAM had a particular project in Venezuela, but the way they implemented perhaps it's not something that we would define as a CBDC, but it is, how do you say, it is initiated by the state. Now, the CBDC trend has taken quite a prominent, become prominent because countries such as China, Japan, and Europe is thinking about issuing this. And in fact, the US also released a statement that all the Federal Reserve Bank from the 1st of January 2021 would also be issuing some form of digital currency. We're not sure as to what it is, but what we believe is something akin to CBDC. So that shows that the governments are very much aware of the technology in this space, and they are coming up with, they are utilizing the technology and coming up with their own solution. Now, I won't touch very much on CBDC, probably just another mention in this presentation. But mainly when you have a CBDC, it is, it is different from, for example, e-wallets that we have, right? Or any wallets issued by a commercial bank. So this CBDC allows visibility, real-time visibility by the central banks as to the economic activities. It allows, it is more efficient. It allows for a new form of taxation, but more importantly, it allows for full visibility, real-time visibility, meaning that in the future, some economies with CBDC may be managed in real time as well. So you can formulate your so-called economic and monetary policy with real-time data. So it's really, really exciting. And also in terms of tax collection, it can be very, very efficient. All right, so let's dive into Polkadot first. So what is a Polkadot? So Polkadot, it's basically a relay chain, right? So it is a relay chain that allows communication between all the blockchains. And because blockchains generally have two types of format. So we have Bitcoin type where we have UTXO, unspent transaction output is a form of data structure for transaction. And we have account-based, how do you say, blockchains, for example, on Ethereum, right? So these two types of blockchains is very difficult to get them to communicate with each other. So the Polkadot solution is to allow them to communicate via a parachain, which is a parallel chain. So whatever goes on the Bitcoin blockchain, for example, will be mapped to a parallel chain. And once it's mapped to a parallel chain, this will be understandable or readable and can be communicated with other parachains. So that's their solution. So in essence, that's what Polkadot is. Now, Polkadot also have something very special called Substrate. which everyone has to be aware of, because Substrate is basically is a toolkit, is a development environment for you to deploy blockchains in a very minimal amount of time. And the best part is this blockchain that is deployed, it is very fast. Some estimates range from 1,000 to 2,000 transactions per second. And also it contains smart contract capability. It can also have sort of a governance feature. And the best part of all is the security is provided by the Polkadot network. And whenever there's an upgrade in the Polkadot network, you do not have to do a soft fork or a hard fork. Basically, the network will upgrade itself. So that's really amazing. So what does that mean for me? For me, it means that the thousands and thousands, probably hundreds of thousands of ERC20 tokens on Ethereum. Now, if those projects are still viable and they're interested, now they can have their own blockchain instead of just a token. So I see this is a very it's a strength of Polkadot that other interoperability platforms don't have. Okay, so this is what it looks like. So we spoke about the relay chain. So here it is. Okay, and the little dots here are parachain, right? Now Ethereum is given a very special space here, well, partly because Dr. Gavin was previously with Ethereum, but also the entire DeFi craze right now is on Ethereum and no other blockchain, right? And why is it? Why is everything on Ethereum? Well, mainly it's two reasons. So for the first reason is composability, meaning that whatever is, they call this the DeFi Lego, right? So whatever protocol or smart contract that is built on Ethereum is easily accessible by another smart contract on the same network, on Ethereum network. So that's the first reason. And the second reason is, of course, in the exchange world or in the financial world even, liquidity begets liquidity. That means money is attracted to where there's most money, right? So right now, most of that liquidity on DeFi is on the Ethereum network. So in order for Polkadot to gain traction, they have a very special bridge for Ethereum. So that'll be the first thing that will come on. And after that, I expect some migration from Ethereum ERC20 tokens to the rest of the parachain. Okay, so in order to gauge, what is DeFi, right? I think the closest comparison we can make is between fintech and DeFi, right? So fintech in Southeast Asia has been growing like crazy, right? So the banking penetration is low. There's 400, about 2/3 of the inhabitants in Southeast Asia that do not have formal banking services and so on. And there's been tremendous growth, right? And DeFi is sort of reflecting that. Now, the difference between fintech and DeFi is that fintech, of course, operates under a regulatory framework, whereas DeFi is totally not regulated at the moment. And DeFi has grown like crazy this year. And majority of that growth is within 2020. And today, the DeFi market cap or the total locked value in DeFi is about $12 billion US. Okay, so this is the difference between fintech and DeFi. So fintech is centralized, closed source, licensing and regulation required, and they have to comply by FATF travel rule. DeFi is decentralized finance, open source, is move fast, break fast. Sometimes it's even anonymous. It's open, permissionless, and it also uses a governance structure called a DAO. So what's a DAO? DAO is basically a decentralized autonomous organization. So it is the idea that you can create an organization using smart contracts, and collectively some of the rules can be put in place where the community decides on the parameters to be adjusted. So normally in a DAO, there will be some parameters where you can vote on and adjust, but the most basic ones are generally the transaction costs on the network, or the size of the pool that is handled by the DAO. But both of them, of course, they have the similar goal, and the goal is to disrupt banking and finance to create value and somewhat challenge the status quo. So just to give you a very high-level idea of where we're at, Of course, this is not, how do you say, proportional to the actual value, but within the global banking and finance, you have fintech, and I believe crypto is partly fintech. A large part of crypto is actually within the fintech realm. So you have crypto here, and DeFi is a part of crypto, and DeFi is growing extremely fast. This is the sectoral comparison. Now, I'll make the slide available to anyone who's interested after this, so don't worry about taking a screenshot or taking notes. But this is the general comparison between a traditional fintech and DeFi. And within fintech, blockchain and DLT is recognized by about 50% of the Singapore fintech firms as an important technology. Okay, so what exactly is DeFi, right? So decentralized finance is basically, the essence of it is automation, right? So, for example, there's an exchange called Uniswap. So Uniswap is a decentralized exchange, and it's been quite phenomenal what Uniswap did. So basically, Uniswap is a very small startup. It only has 7 employees, and Uniswap, in fact, took some investment from Coinbase, which is the largest US crypto exchange, centralized crypto exchange. Now, at one point in time, Uniswap's volume reached about $1 billion US a day. And at that point, I think Coinbase was doing only half of that. Now, the great difference is that Coinbase actually have more than 1,000 employees, whereas Uniswap only has 7. So that's a really a very high how do you say very high. There's a very high comparatively level of efficiency in a decentralized finance because they automate most of the key function, right? And in the DeFi world, sole custodian is very important. So the idea that you should be the one that control your own asset is very, very important within the DeFi world. Whereas in a traditional finance, you would need to trust someone with your funds. And of course, everything is open, decentralized. Now, it's partly true because the smart contract portion normally is open and available on GitHub for anyone to see your copy of work. But normally the website components, those are not visible. And of course, if you were to sort of copy a project, it would not be possible to copy completely, right? So you still need to work on the website portion. But one of the things that made DeFi, especially the development, especially rapid, is because most of the websites on DeFi, if you see, some of the famous protocols, they actually have very minimal UI and probably terrible UX, right? So yeah, so that also makes it easy to copy. So that's part of the story. And of course, everything is totally transparent. So because everything is done on a blockchain, so everyone can see what happens, right? So this is a visualization of DeFi, just to give you an idea. As you can see, there's 1, 2, 3, 4, about 4 large pools, and probably have about 3 or 4 minor pools. So the large pools consist of Compound, Uniswap with decentralized exchange, right? And you have Kyber, and you also have smaller pools such as Bancor, Maker, DYDX, Aave, and so on, right? So of course this changes all the time, but as you can see, the liquidity is mostly concentrated in a few places and very little elsewhere, and that's what it looks like. Okay, so let's see. Now there is a project I want to touch a bit on. It's called Yearn Finance. So I'm not sure if any one of you heard of Yearn Finance, but Yearn Finance is actually a decentralized so-called hedge fund, right? So the idea of the story of Yearn Finance is that Andre Cronje, the founder, he was managing his investments, right, every day, right? So every morning he wakes up, he has to look at which pool has the most interest. He has to move the funds to these pools, right? So he got lazy and he decided to automate it. So after he automated, in fact, there was a lot of demand for people who, similarly is looking for the highest yield on a daily basis. So a lot of people start, depositing money, right? And then Yearn Finance came out with version 2 after that, right? So the pool that they managed, the pool of money that they managed was so big that it gets a little bit complicated, right? And because of the growth of the DeFi ecosystem, it also the kind of yields that you can realize from the system is also very, very complicated, right? So what happened is Yearn on version 2, they actually separate into so-called a vault, right? So a vault is basically just a pool of money. So you have an Ethereum vault, and within the vault, there's actually money allocated for certain strategies. And these strategies are actually crowdsourced from the community. So if you have a good idea of let's say a great arbitrage opportunity, right, or whatever, you can actually propose it to Yearn Finance, and if the community chooses it by vote, then you will earn 10% of the proceeds from your strategy, right? So you're just not giving away. You have a brilliant idea. You can actually monetize it, even if you have, no money at all. So this became a pretty crazy thing, right? Because the kind of things that you can do in within the DeFi ecosystem is pretty crazy. So you can basically borrow money off some. You can actually do a transaction, which is called a flash loan, where you can arbitrage. Okay, I'll just keep it simple. I'll say arbitrage, right? But if the arbitrage does not go as planned, then the transaction will fail. So what that actually means is that you have zero risk when you do your arbitrage. It's either you make money or you don't, make money, but you don't lose money as well. So because of this, it became super popular, and you can see that Yearn Finance, I believe, is one of the top 30 coins on CoinMarketCap. And it's the story is a bit crazy, but yeah, it's important to know that. So okay, so why the DeFi craze, right? So mainly the DeFi craze came because owners of assets, of crypto assets, they suddenly start to realize that instead of keeping BTC in a wallet for, in a hardware wallet for years and not earning any interest, now they can actually take their BTC and lend it to a protocol, right? And the key part is, of course, they must be borrowers as well, right? So in the early days, it was a very straightforward system where, I lend you my BTC, and in order to borrow, you need to put up a collateral. And when you put up a collateral, normally because of the risk, because of the volatility of the Bitcoin price and general crypto prices, you actually have to over collateralize, right? So at that point in time, last year, I thought to myself, this is never going to work, because when you over collateralize to borrow something, you're in fact locking up liquidity in the system, and it doesn't make sense, right? So as more and more people try to borrow, and they will over collateralize, and more coins will technically be locked up. So that's a bit silly, right? So anyway, what happened after that that really kicked off the DeFi craze is that some of these platforms started issuing their own tokens, right? So instead of just a borrowing and lending platform, you would issue your own token. And when you issue your own token, it's meant to incentivize people to borrow and lend. So there was some imbalance in the system where at one point in time, if you were to lend out your, let's say, it's not BTC, it's another coin, but let's say BTC, okay? And someone were to borrow your BTC. Now, because of the token rewards they will get in addition for the borrowing activity, they will actually make money from borrowing, right? So it's quite a crazy situation, but this is exactly what happened. And because of this, a lot of people start, this so-called yield farming, right? So in effect, they will take these tokens that's unused, and they would, deposit it in a protocol, and this protocol will give them tokens, the protocol tokens. So normally they will say this is the so-called governance token of of the protocol. So the issuance of these additional tokens is mainly what I feel is responsible for the DeFi craze, and also the realization that a lot of these assets can be put to work. So that's why you can see that the amount of value locked in DeFi today is about 12 billion US dollars, and that's pretty crazy, right? So okay, let's see. Yeah, I'll move on. Yeah. Okay, so we just explained yield farming. Okay, so in simplest form, yield farming means to put idle assets to work. Often it involves receiving rewards by providing liquidity, because many of the protocols rewarding liquidity providers are trying to bootstrap liquidity to kickstart the DeFi application, right? So that's one of the strengths of crypto. So if you're a project, a crypto project, and let's say you want investors, right? Okay, so you create these tokens, you create a structure that gives them value, right? And let's say you don't have a community, right? So you would bootstrap your community, like you give free airdrops or ask them create jobs and ask them to do tasks. So you bootstrap your community. Now, if you don't have so-called liquidity to start, you can also bootstrap the liquidity, right? So this is the wonderful thing about this, this instrument called token, right? You can represent anything, you can create it out of thin air, and if enough people believe that it has value, then it has value, right? So so this is the part where I think we have to look at when we talk about, is this a scam? Is it not? Because obviously this is something that someone in traditional finance or in fintech they cannot do just yet, right? Okay, so yield farmers are people who look for and maximize these opportunities. They measure yield and the amount of interest given rewards thrown on top of assets like DAI, USDC. So all these are stable coins which you can put to earn interest, but you can put other type of crypto assets as well. And the issuance of these tokens and the so-called volatility of these tokens, it can go very low, it can go very high, are somewhat responsible for the very crazy APY that you see, right? So the APY on Compound, as you can see on this chart, is quite ridiculous, right? Because how much do we get from opening a fixed deposit in the bank? Not very much, right? But over here you can see it spiked. The APY is spiked to something like 22% per year, and for me that's a really good rate. But of course it's not sustainable. But a lot of people, they take this figure, this crazy figure here, and they just assume that it's going to stay. But in fact, it's very volatile. So what they do is they take the amount of interest generated, maybe perhaps over 1 minute, and they multiply that to to a year. So you get very crazy APY, but it's not consistent, and certainly it's not sustainable. Okay, so these are the various DeFi categories. So you have fundraising. Jasmine spoke about ICO, STO, IEO. Right now, there's something called IDO, which is an initial DEX offering. So on a DEX system like Uniswap, you need to bootstrap the liquidity. That means someone needs to provide the equivalent coins of each of the trading pair. So you have, let's say, Ethereum in your token. So you need to put 50% of Ethereum and 50% of the other token, right? Then you start your pool. So some projects are doing that. They're just raising very minimal amounts, 50, 100,000 US dollars to start the pool. And once the token is trading, then it takes a life of its own. So this obviously very good for small projects because they do not have to pay a very large listing fee to any large exchange. And of course, it's decentralized. So that means that there's no AML and KYC. Now, there's also a new, very, very recent trend. I'll call it initial NFT offering. Okay, so no one is using this right now. So I just put IML. Okay, so I just made it up if you're wondering. But initial NFT offering is where people use, non-fungible tokens, right? So these are unique tokens that, for example, can be connected to a piece of artwork. And they actually issue some tokens for the holders of the NFT, right? So imagine if you have a Pokemon card, and by owning this card, it entitles you to 100 token airdrop or something like that, right? So that's a really fun thing that's happening. And in fact, the so-called yield farming is also extended to NFT nowadays. So you can actually take your Pokemon card and deposit it in a protocol, and they will give you some coins, after 30 days and so on. And of course, you have stable coins. We have privately issued, okay, can be centralized or decentralized, and you have the CBDC, which is coming on stream. You have open lending protocols, like, for example, Aave or Compound, and you can do flash loans. Like I said just now, is where it's a very special type of arbitrage opportunity where either you make money or you don't lose money. So it's very interesting. And you have prediction markets such as Augur, decentralized exchange, Uniswap, SushiSwap, a competitor, which is basically a copy, and HoneySwap, which is a DEX on level 2 Ethereum network called XDAI. And you have decentralized derivatives such as Synthetics, SRM, which belongs to FTX. And level 01 is a decentralized derivatives exchange that I represent. And you have decentralized insurance as well. So you have Option and you have NXN, right? So it's really, really interesting, the combination of these trends and where it's leading to. So this Soromitsu is one of the projects that I represent. They are known for creating the CBDC, central bank digital currency in Cambodia, but they also are a key contributor to the Polkadot project, and they will have a project called Sora, and they will build a multi-chain DEX called Polkadot. So that should be ready by beginning of next year, and it's quite exciting to see what happens then. And these are some details of their CBDC project. I won't go too deep into it, but basically, it's not a crypto project in the sense that the central bank, of course, would have full control, and they can reverse transactions and so on. And there's also sort of like access level or permissions required. And this level 1 derivatives exchange, we just launched, and we're having a trading contest soon. So if you want, you can try the demo version. It's completely free to use, and you can win some prizes as well. And okay, so I think it's important to differentiate, right? Is this scam or not? Is it, I think what happened during the ICO is that a lot of ICO was funding raised by startups. And it was ridiculous at the time because the startups, some of them don't even have code, right? So it's just a website with pictures of some people, and they were raising money based on that. And there were unregulated, like if they were to sort of exit scam, there's no way where you can recover your money. So there was so much scams, right? And I think that was the most damaging thing to happen to crypto. So so this time, like what is different? And I can tell you, it's very, very different in the sense that if you guys have heard of this Gartner hype chart, right? So every technology would go through this hype cycle. So I believe we've the hype cycle peaked during the ICO hype, and we've certainly reached a bottom within the last sometime within the last 2 years. But definitely this time there was a lot of lessons learned, and even though there are so-called the DeFi experimental projects segment where people are still crazy. There's anonymous teams and there's a lot of like scams, rug pulls, and so on. But overall, if you look at the entire space, central banks are developing their own digital currency, right? And you have more and more fintech companies that's adopting blockchain technology. So overall, it's much more, it's different in nature. It's not like 2017 ICO. And what I like to see is that a lot of projects, if they were to raise funds, they will actually need to have some sort of code, because people are smarter. Like, where's your code? Where's your team? So yeah, so I think it's different this time. There's also more developers, and there's also a movement where companies or projects are adopting fair distribution methods, meaning that the old ICO method where the VC get a very special price, they can get a price that's a fraction of what's being offered to the market, maybe at 20 or 30% of the market price. And that's a really bad practice, because what that means is that when the coins are floated, many of the VCs will choose to dump. Now, I don't think it's sort of like there's any sort of malice in it. I think why they dump is because the VCs in the early days, especially during the ICO days, they have the approach of a traditional VC. That means when they invest in something, they will actually hang on to it for a couple of years. And that was the original intention by the VCs. But unfortunately, because of the volatility of the tokens, a lot of them just kept their coins, and 6 months later, they realized they've lost 70–80% of the value of their investment. So because of that, VCs start to take advantage of this liquidity. In fact, many VCs started to have so-called trading desk. Okay, so that's the reason why, right? But again, the problem doesn't go away as long as any project have a so-called pre-sale and is available at a lower price compared to anyone else. Then it is very, very a high possibility that they could face a dump. Okay, now, right. So nowadays, startup need to have at least an MVP. I mean, I'll say that this is true for maybe, I don't know, 70–80%. But there are still projects that's raising funds without any code at all, right? And that's very important. You should avoid those projects. Okay, and right, and this time is different because even though there is, how to say, nowadays, instead of just buying into a very volatile asset, they can actually keep it in an interest-bearing account. So there's many mechanisms to allow this to happen, right? There's even projects out there that do not require any investment. So what they require is something like a lock. So if you promise me that you deposit a certain amount and you do not withdraw, you lock this in the account for like 2 years, then we'll give you tokens, right? So then it's no longer investment in the traditional sense. It's like just an opportunity cost, right? So that's becoming very, very popular, especially in the Polkadot ecosystem. Okay, and then major VC and OTC. So a lot of the DeFi boom also came from so-called centralized crypto finance. Okay, so what does that mean? It's a little bit of I mean, it doesn't make sense. It's like an oxymoron, but what it means is that if you look back 2 to 3 years ago, there's actually companies offering financial services to, for example, Bitcoin miners. So Bitcoin price is volatile, and these so-called Bitcoin mines, they are of industrial size. So they need to ensure that they're able to pay the bills, right? And sometimes when the Bitcoin price is low, they do not want to sell. Okay, so they would rather put their Bitcoin as collateral, and they will borrow some cash against their asset, right? So there was already an existing centralized crypto finance industry. It can be custodial, it can be very large OTC desks, and they can do trades of like $10–20 million. Like they're really of large scale. So nowadays, even those VCs and OTC, decentralized crypto finance, they also start using a decentralized finance platform. So that's another how to say source of the DeFi craze, right? So when these people who are very, very traditional in the crypto sense thinking started to adopt this, then you see huge volumes, right? A lot of money flowing into this. Okay, and the last one is transparency risk. So normally people will say like the more transparent, the better. In fact, in the financial world, it may not be a good thing. Okay, so that's why I fully expect that privacy will be again an important topic next year going forward. Okay, so what does it mean, right? So it means that, for example, if I'm trading on Uniswap, and I want to buy a certain coin, right? But I want to buy so much of that coin that the price is going to increase 5%, right? Now, because I have to send my transaction to the blockchain, so there are bots, there are front-running bots that actually pick up my transaction and they send in another transaction with a higher fee, so that their transaction will get in front of me. So what that means is that they will get in front of me, and by the time I buy after them, the price will increase 5%. And they will sell immediately. So it's a sure way of getting profit. So there's a lot of front-running bots, and even there's back-running bots, right? So so that's it's a very interesting, very unique problem within the decentralized world. Okay, so where I see the future trend, I think DeFi is going to continue to grow rapidly. So far, the growth has not been from the retail market. So what I mean by that is, if you look on Google Trend search, the search for Bitcoin hasn't really picked up because I believe a lot more people is already aware. And the current pool is actually from the existing so-called, is from mainly from the existing investors, those who have some experience of crypto and blockchain. So they're there already, and when the trend took off, some of them pay attention, so it was easy for them to get on. There's also a phenomena where, for example, Dogecoin, which is a meme coin, they managed to have some traction from the TikTok community, social media. So it was like a challenge, right? If I buy like $10 of this, I can be rich, yeah, if enough people buy it. It's technically true, but of course it was like, almost like a pump and dump. So there were some very young investors that flowed into the space. And there's other platforms like 4chan, where it's totally unregulated anonymous website. But that was what we saw, right? And that led to some of the crazier impacts on this space. Now, of course, the other thing that really has a huge impact is the FATF travel rule. And right now, FATF travel rule only applies to centralized exchanges or custodial service. So our Securities Commission in Malaysia, they will have a new regulation on custodial wallet services. But what this means is that, in essence, if you have a transaction, let's say if I'm sending a transaction from one centralized exchange to a friend who has an account on another centralized exchange, it means that both the exchanges would know, who are the sender and receiver, right? And anytime the government asks for these details, they will provide it to like any government that asks. So because of this, a lot of people are not comfortable with this situation. So that's why they moved to decentralized. And that also justifies in a way why people would pay, on Uniswap, something like $10 or $15 per transaction, which is ridiculous, right? I mean, crypto was meant to lower the transaction fee, and yet we're paying $10 to $15 to get a trade done. Okay. And I believe that's the price of privacy that people are willing to pay. And I don't see this changing anytime soon. Now, it will take around 2 to 3 years. That's my personal expectation before governments can actually tackle this space called DeFi. But of course, because of the hype and the news generated, they may take a look at this sooner. Now, there's a very large risky area that I have to mention. Is the trend of meme coins. So if you guys heard of Sushi Swap, it's like, it's an anonymous team and they choose this, logo of a sushi and they try to fork Uniswap. So it's very, how do you say, in a way, it injected a lot of fun into the space, but it's not something that I would consider investment grade. So if you find something that is anonymous and has very funny website, which is very poorly done, right? And when you go to the community, it's like everyone is like moon and lambo, like I'll avoid it seriously. Yeah, but it's for fun though. Some of them do drop tokens, so I do get involved. But other than that, I wouldn't put serious money in there. Now, of course, all this in the end will contribute, right? So this experimental space in this industry, whatever is being done, is all available. It's open source, available to anyone taking a serious look. So I expect the serious projects are the one that is going to pick up on an innovation that has been created, and they're the ones who's actually going to benefit in the end. So that's all. Yeah, I have a Facebook group. You can check it out. I have my LinkedIn, I have my YouTube. So I do YouTube videos as well. And yeah, and of course, Access is part of Access in Singapore, which is the largest crypto association in Southeast Asia. So if there's any questions, yeah, please feel free to ask.
Thank you so much. First of all, I would like to thank Brother Aaron for having this very high level and technical and very insightful discussion. And I think that the presentation was also very well organized. Just to share some ideas with you as well, I think I truly believe that DeFi space is growing very fast, and there are so many exciting things are coming up. In fact, I was talking to someone having Islamic financial products in DeFi space, So this is the solution. And the question came to me that, okay, how Islamic banks will operate in the DeFi space? And my response to them was that, okay, you do not need Islamic banks in a DeFi space because it's already a P2P environment. So you do not need centralized institutions, financial institutions, because they will actually add more cost.
For today, article is also there is by your friend, for us about Islamic DeFi.
Sorry, your voice, Mr. Asif, I cannot hear it clearly. Yeah, so anyway, we have few questions and then Mr. Asif will come back with his comments and feedback, inshallah. So there is one question that we were talking about IEOs, ICOs and STOs, and there is a concern about the fluctuation in the prices. And I have also seen some of my friends who were doing some ICOs, and what happened is like they were not able to cash out their funds, and they were not able to convert them into dollars and fiat money. And what happened is it was when I'm talking about November 2017. So then the market crashed and they were not able to actually convert their funds into fiat money. And then they lost a lot of value, like 95% of the value was gone at that time. So do you think that these ICOs and STOs can be issued on stable coins rather than having BTC or ETH?
That's a very, very interesting question, Dr. Farouk. And I believe it's also the right question, right? I believe, first of all, stablecoins will be regulated. We've already seen some that is regulated. We've seen USD Tether, which is a very, very controversial issue right now. And they've been requested to provide documents to the US authorities. So I believe it's just a matter of time before they shut down, right? But where the future lies, I believe, is a concept called established coin. So what does established coin mean, right? So established coin means that there's an algorithm that manages the price fluctuation, and this is akin to something like a central bank. So every central bank in the world, normally they have something called a forward guidance. So a forward guidance means that in the next year or short term, medium term, and long term, where do they see their currencies in comparison with other major currencies in the world, especially with their major trading partners. So obviously, there needs to be some stability in order to ensure that commerce can go ahead unimpeded. So a bonding curve is basically a curve, or you can present it as a straight line, but in general, it is the guidance of the exchange rate. So some projects have implemented this. Now, it is still in the very early stages, but it seems to be working in some of the projects. So I believe this would be a fantastic solution, provided that at least one of the projects can prove over time that it is sustainable, right? And a lot of the coins that was issued in the past was based on the IOU. So if you give me some money, I'll give you these tokens, okay? But these tokens are not backed by anything. So now there's projects, especially established coin projects, where they're saying that, okay, if you give me your Ethereum, this goes into a reserve, and this reserve will back the value of the coin. Why is that? Because in order to control the fluctuation in the price, the upper bound and the lower bound, you actually need some reserve, because sometimes in order to support the price, you need to use the reserve to buy the coin on the market, okay? And sometimes if it's above the higher bound, you should sell more coins, right, to lower the price, right? So this is a very interesting thing. So I like to say, in a very simple term, it's a decentralized central bank. Sounds like oxymoronic again, but it's a fantastic thing that's happening. Now, the thing that people do not understand about DeFi is that if you look at the history of the financial world, there's been over 7,000 financial instruments created. Now, the financial instruments that we see today, like insurance and bonds and so on, these are financial instruments that have managed to gain traction. They are not, all that is out there. In fact, there's many financial instruments that have failed, that did not get traction for many reasons. So what DeFi actually allows is that DeFi allows an experimental environment where you can turn your fantastic economic theory or financial theory into an actual working mechanism. And this is where the greatest value of DeFi lies. Can you imagine, So that's why for the Sora project done by Soramitsu, they are different. I put them in a different category. The reason why is because, very simply, before someone would, if they want to do a crypto project, they will pick a supply. I want 1 million coins. Out of 1 million coins, I want 20% for my team, 10% for early investor. Okay, so they do that. It's very, how to say, it is not professional. It's not based on any science, right? And of course, it's not sustainable, right? So Soramitsu actually employed the son of a very famous economist in Japan called Yamaguchi. Okay, so Yamaguchi is known for a new central bank theory, and he has issued a paper on electronic public money. So the whole idea is that the country as a central bank should manage the supply and demand of money in the correct manner so that there's a minimal, so you minimize government debt. So of course, this is a very high level thing, but what they managed to do is they've taken all his input, all his theory, and they have implemented it in a cryptocurrency. And not only implementation of the theory in the cryptocurrency, but they've also used system dynamics. So it is a simulation program where it takes in to factor various assumptions and it generates a result based on that. And they've gone through testing of many months just to come up with the crypto model. So in the end, what happened when we presented this model to the public, many did not understand. Why is it like this? Why is it like that? But it's something based on science. And I believe projects like this, there will be many, many more projects like this in the future. But projects like this will be the real, will be the real deal. So up to this point, I believe everything is an experiment. Even the next 6 months or 1 year may be an experiment, but certainly some serious results is going to come out, and it is going to come because we'll finally have the right people. You have the professional economists, the professional financial people in this space that's going to create all this.
Okay, perfect. I have a few questions, and I will be asking them very quickly. So one question is, we have regulatory concerns, for example, AML, KYC, FATF. So in a DeFi space, or if we are talking about a decentralized exchange, can they be implemented?
Okay, so for decentralized exchange, right now, in fact, the Malaysian government, of course, does not touch this area, and then mainly because FATF, they have no way to govern this. But there's solution. Of course, regulation will come, and of course, there will be a solution. So one of the solutions that is possible could be an anonymity tax, meaning that if your funds are coming from an anonymous source and you cannot prove what it is, you pay a tax, 15-20% you pay. Yeah, and that's it. So that's some of the possibilities, but I believe 100% it will be fully governed, and I believe some mechanism will be put in place to discourage the use. But again, the important thing is that space, unregulated, decentralized space, will always exist, just like what we have on the internet. One of the key drivers of the Polkadot project is actually a foundation called the Web3 Foundation. So what does the Web3 Foundation means? Okay, so the Web3 Foundation is pushing the concept of the Internet 3.0. Now, the infrastructure that we have today is not ideal. Why? Because we have major tech companies that even the US government is saying is overpowered. This Facebook and Google, they have so much data on each and every single person that's using the service. So they want to break up that so-called monopoly because they have too much power. And for the same reason, they're very afraid of Facebook issuing their own cryptocurrency because they really believe there is some potential that it can even overtake the US dollar. I believe that's the main reason. So coming back to this, yeah, I believe this Web3 will be the key driver of blockchain. And this is what blockchain will be ultimately used for. It will be used for the decentralized internet. So what does decentralized internet means? So for instance, number one, instead of the companies keeping your data, individuals should have control of their own data. Just like how we're in control of our own cryptocurrency, okay? But we should be in control of our own data, right? So blockchain allows this structure, okay? Now the other thing that is gonna, kick off the revolution is something called decentralized identity. So what does decentralized identity mean? Well, in fact, the concept of identity is a little bit more complex, okay? So obviously, my name is Aaron, and I have an identity, right? It is a formal identity by my government, who issues me a document that says this is my name, this is who I am, and of course, I'm a professional, so I have a degree, I have some certificates, right? So these are credentials that's attached to my identity, right? And from there, I may have many accounts on social media or various websites, okay? So these are my profiles. It does not represent my identity. It is just a profile. And that profile is only fit for purpose, right? So in fact, you have these three components to decentralized identity. So in the future, we would ideally have a structure where we have one identity and we have credentials linked to the identity, and we have many different profiles that we can use. Now, why we want to use profile is very simple, is because when we register for a service, we only want to give the information that is relevant to the parties. So through this decentralized identity, we'll be able to facilitate that. And that will be, from the user perspective, that will be one of the main change in structure for the way we use internet. And also from the internet perspective, there's massive centralization. So for example, the country of Russia shut down the internet for 10 minutes. The entire country can do that, right? So, so that actually presents a lot of risk, because if we enter into a world where there's constant wars, especially between major powers, then they can take away, our access to information and communication, just like that. So the decentralized internet wants to build a structure where people can't stop what's going on, and that drives a lot of initiative. Even Elon Musk Starlink, where he plans to put satellite into space in order to provide internet service to the entire world, that's part of a Web3 structure. So this is very exciting. So we're not only talking about a decentralized finance, we're talking about decentralizing the internet itself.
Okay, perfect. Mr. Asif, you have any comment? Because I have two questions, but before that, if you have any comment.
Yes, I was just saying that recently your Farooq, your friend Faraz Adam have published a book on introduction to DFI and Islamic DFI. And okay. Yes, just was talking about, and there is a summit also next year in 2021 March on DFI and awards and summit, and I think it's been organized by Dubai blockchain organizations. Mm-hmm. So it's the topic is very hot topic which Arun is talking about. And just a quick question I have, as if for so many people here which they want to understand, what is the link? I have seen the slide. You have tell the slide just to go through that. What is the link between this DFI and fintech and blockchain? We understand that DFI is using a blockchain, platform and technology. Can you just have a quick answer for as a easy answer to understand that what is the link between DFI and fintech and blockchain? Thanks.
Sure. Okay. So first of all, blockchain is the technology that's utilized both by fintech and DeFi. So DeFi is the unregulated decentralized space where a lot of experiments are going on, and fintech is a subset of financial technology that is used by institutions, and normally it operates in a sandbox environment or in a regulated space.
Thank you. To you, Farooq.
Okay, perfect. I have just two small questions, and I think that the answer will be very quick. Number one is, do we have, like, if we are talking about regulated trading platforms, some of them are regulated. So do we have circuit breakers when the price fluctuation is very high in terms of crypto assets in those regulated platforms?
Okay, I believe some of the platform have their own policy, but you have to understand that centralized crypto exchanges are smoke and mirrors. So why is that? Because a lot of the volume generated on these exchanges are actually not the real volume. Yeah. So this is a concept that we have to understand. Yeah. So exchanges take volumes from each other. Okay. And for example, Binance, which is a lot of people is using, I mean, they can have a spread of something like a couple of dollars, and that's not possible for a single exchange. So in terms of circuit breaker, I think it is something that cannot be done for a spot exchange. Okay, the same reason. The simple reason is that if the price of Bitcoin were to go down because of all the way that all these exchanges are connected, all the price will go down, the worldwide, right? But if you talk about derivatives exchange, for example, BitMEX, okay, they will have circuit breaker. Why? Because they have an order book that is easily manipulated either by themselves, the operator themselves, or by very how do you say, resourceful parties. They can cause a flash crash, right? So this is the reason why when you talk about trading derivatives, I really highly recommend that beginners do not try margin trading or do not try futures. Even if you do start with options, because your risk is well defined, is limited, and there's no possibility of a flash crash, right? So flash crash is, I can tell you, flash crash is something that is, how do you say, can be easily manipulated. If they want to take the money from you, it's like you're putting your money on the table for them to take. This is what the futures market is. So yeah, so the short answer is spot exchanges don't have this mechanism. Derivatives exchange have this mechanism, but how they're managing it is highly questionable.
Okay, thank you so much. I think that there is one last question, and it can be your final thought as well. That what are the opportunities available in crypto space for an aspiring entrepreneur?
Wonderful question. I believe looking back at the example I gave of Uniswap and Coinbase, I think the direction is very clear. Okay, the future is automation. And if you can automate your business, and if you can have a tool to bootstrap whatever you need, you can bootstrap the community, you can bootstrap your starting fund, which is what crypto is about. You can bootstrap liquidity, you can bootstrap anything using a token mechanism. So if you understand how this works, this will be very useful. Okay, if you understand how smart contracts work, what are the limitations of it, you can come up with a solution which most likely, I believe in the future, a lot of it will be hybrid solutions. Okay, so using the best of both worlds, centralized and decentralized. Now, if you can create a business in the sense of what Uniswap has created, a 7-person team can take on a 1,000-person corporation. Now, there's no limit.
Okay, wow.
There is no limit to your imagination. So I highly, highly recommend everyone to take a serious look at this space. If you have any questions, ask Dr. Farouk. He's very, very knowledgeable in this. And do start on that journey, because the problems of tomorrow is already here today. We've seen the economy crash with COVID. We realized that, I mean, why is there more interest in crypto during this time? It's simple, because there's very few other profitable business to be done. I myself came from oil and gas, and I can tell you, the situation is terrible. Our national oil company, Petronas, have made the loss of 30 billion this year, and this is the first time they've made a loss in the entire existence. And what they have done is something unprecedented as well. They've actually canceled insurance. They have canceled insurance to save costs. So now they're saying that we have enough funds to take on the risk ourselves. Can you imagine that? Another thing that they have done, which I believe shouldn't have been done, is third-party inspection. Can you imagine? Now they don't even want to give the inspection to another party. They will have another Petronas company providing the inspection, and of course the liability is back on Petronas itself. So can you imagine such an industry which everyone, I believe, thinks is somewhat lucrative, somewhat big? It's gone, you know. So there's very little opportunities out there. But if we look at what blockchain has to offer, you know, all this, not only blockchain, of course, various technologies. If we understand it, if we understand the power of you know, the crypto economy, where the main point is not issuing the crypto and getting funds. The main point is that you can use it to incentivize any behavior, for good or for bad, right? And then you realize the full power, and you can harness the power to make some a good business. And for Islamic finance, actually, I like to add, I think it can be done, you know, because for example, under the DAO governance, the DAO that we have today is not very complex because there's only a few parameters where you can adjust by voting. But I believe in the end of the day, the DAO is just providing a formal structure, just like how a legal agreement provides for any organization. So I believe that, you know, in the Islamic world, whatever is your philosophy, your belief, it can be structured in a DAO. I highly believe that. Yeah. And I believe it will be a fantastic experiment. And where this is going at the end of the day is something even bigger than any one of us can imagine. I really believe in the concept of, you know, electronic governance. And the real electronic governance will come one day when we will have certain parts of the government that, you know, is operating on a smart contract. Okay, that will bring maximum efficiency. It will bring, you know, transparency. Of course, we haven't really figured out, you know, exactly, you know, what is what, you know, how it should be implemented, what it looks like in the future. We do not know today, but certainly, I believe one day we'll arrive at that juncture.
Okay, perfect. Thank you so much. I would like to ask Brother Asif to have some concluding remarks, please.
Thank you, Mr. Arun. I think next you will be the next IT minister for the Malaysia.
Oh, no,
and
no,
hopefully,
no.
no, you have very good vision and, you know, analytics about these things which are going on. So, and if we have to cast vote, we'll cast vote for you over there in Malaysia.
Thank you for your decision.
Okay. And I thanks you and Jasmine for a wonderful presentation and a very knowledgeable session. You have given inside information, especially on this blockchain and how. Basically, I started my journey in 2018, and I thought to learn about, you know, blockchain is still I'm learning about that one. And I today also very much pretty much optimistic that blockchain, like as you have said, can do so many things, good or bad, whatever you can use on that one. And especially, and now the things after COVID, it has become accelerated in digitalization and digital formation. And now you see that pretty much people are there, understand what they're, I think, which things which would have been done in the next 5 years because of COVID, it's accelerated and things like that. And today we think that the importance of, you know, this blockchain technology, fintech, DFIs, and other things like that. And at our platform, Alif Technologies, we always, you know, invite people like you who have in-depth knowledge and understanding of things which you can, you know, share the knowledge. And our main mission is to share the knowledge and help the people who are in this, you know, areas or working on that one. We work on especially on 3, you know, major things is like academia, consulting, and development. And in the academia, we have this sessions going on, which Dr. Farooq is our co-partner, you know, partner and founder, and he is very much in on this one. So I thanks everybody of you and the participant who are so patient and listening to us till now. It's almost 1.5 hours session have gone, and still they are very much, and there are some questions maybe, you know, they will be asking. We have already posted and we will forwarding to you these questions. And again, thanks a lot to you Farooq.
Okay, thank you so much. Actually, I I apologize that we have just extended our time, but it is due to the questions basically coming from the participants, and I wanted to basically clear up all of them. And Alhamdulillah, we were able to basically answer all the questions. So this is wonderful. And then I again thank you all the panelists and distinguished speakers, and also our participants for this event. And I really hope that you have a productive and insightful session, inshallah.